Good morning, everybody. Hey, welcome to Thursday, the 12th of September. I hope your week's gone well so far. As we look at the markets yesterday, not a bad day. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget in this world we live in, there are so many things that are out of our control. However, you can take control of your investment portfolio by knowing the amount of risk that you have in that portfolio and making sure that it lines up with where it should be based on your current circumstances. And that's why I developed the Core Retirement Design. Give us a call at 863-382-0037 to schedule your core retirement analysis. That we got Dave coming up next.
You're in the mix. Morning, Dave here. It's 8:43. 17 before 9. Let's check in on your money and see how Wall Street's treating you this morning. Yesterday ended up okay, but we had a little bit of a scare in the morning. We got a little bit of a disappointment on the consumer inflation number, and the Dow ran down about 400 points before recovering. We got green ink, though, at the end of the day. Let's see if we can continue that trend. Phillip Statler is on the phone from Statler Financial Services in downtown Sebring. Good morning, Phillip. How are you today?
Hey, good morning, Dave. Doing good today. I hope you are as well as we getting close to finishing out this week. And you're right. Yesterday, it did bounce back, and we had a pretty nice close to the day.
Yeah, they had a temporary negative reaction. One of my tip sheets was calling it a volatile day. I'm really not going to call it volatile. We got the consumer price index, a little bit of a disappointment. The Dow, just because they're the biggest numbers and more fun to watch, they dived by about 400 points. Then at 10 o'clock, they just started a steady climb upward, ended up 125 points on the Dow, 59 points on the Standard & Poor's, and get this, 369 plus points on the NASDAQ, a full 2% increase. Gosh, could it have anything to do with NVIDIA, huh?
NVIDIA had a great day yesterday. Now let's be frank here. They've suffered here over the last week or two and have continued to fall off of their all-time highs. But yesterday was a great day for them, up a little over 8% yesterday. So that obviously played a big part of the NASDAQ.
Absolutely. 8% bump on something as big as NVIDIA makes a difference. Word out of one of my sheets is that their CEO, Jensen Huang, did a keynote speech. In other words, he hit the rubber chicken circuit at the Goldman Sachs Tech Conference, and evidently some of the high rollers that were there were impressed with what he had to say, and they said, oh, all right, let's go back and buy some NVIDIA, and really traded them up. But still, everything was green ink, and like I said, I'm not going to call it a day where we have one shock and then climb gradually back up as being a volatile day. It just got a volatile start to the morning, which kind of brings us up to the same picture this morning as far as the reports out of the government go. Yesterday, we had the consumer price index, which overachieved by just a little bit more than the number that the economists were expected. This morning, we get the producer price, wholesale inflation, and the overall number was exactly on what analysts expected, up 0.2%. But the core, getting rid of the variable stuff, and again, to define for people, the core number generally is the stuff that ratchets up and doesn't go back down again. That was up 0.3%. Market was expecting 0.2%. Maybe we had our shock value worn off yesterday. The market doesn't seem to be responding the same way.
No, they don't, and it's kind of funny because it just lines up with exactly what happened yesterday when it comes to the CPI. So that was kind of interesting that it kind of kept the same track, and you know that was. It's not having an effect on the futures this morning. We're still hanging in to where we were earlier, so not bad.
The modest green so far, which I'll take happily. I mean, I saw that when we were talking before we went on the air, and I said, "Oh no, this looks like yesterday again." So inflation is still under control, but trending in the right direction, but not necessarily going where we want it to go very quickly. And our friends up in Chicago that give the odds of an interest rate cut. In the early part of August, they were saying there was a 51% chance of a half-point rate cut next week when the Federal Reserve Open Market Committee meetings. As of yesterday, those odds are down to 13%. Those inflation numbers kind of improved the chances of a 0.25% rate cut next week, didn't they?
Well, yeah, and it makes sense, Dave, if you look at the numbers and where they are. And I mean, we haven't talked about the unemployment number yet, but initial jobless claims were a little bit higher than anticipated by maybe 5,000, came in at 230. But you know what? They're saying there's really no real big signs of rising layoffs coming. I did see though that Microsoft is laying off about 650 people in their gaming division, and I think we'll continue to see little spurts of that where divisions are going through some reorganizations, and so they're downsizing the number of employees that are in that division.
And it's something you and I have just been surmising, because we don't have anything empirical to prove it one way or the other. A lot of the layoffs that we seem to see happening, and the substantial numbers, are in the tech industry, and they're out on the left coast where California, Oregon, Washington State have some very, very progressive layoff laws. California, I know, has to give like 60 days notice and severance to an employee that they're downsizing. And, well, okay, fine. In 60 days, anybody that really wants a job in today's setting generally can find it. So the unemployment claims haven't been reflecting all of the layoffs that we're seeing in the tech industry.
No, that's right, because they've been able to bounce back into new jobs, so which is a good thing.
Absolutely. It's kind of interesting. You mentioned the first-time claims. Yeah, I had my economist's listing had it exactly on what they expected, 230,000, but still in the same zip code, and the number of first-time claims really aren't showing up, as trending upward, indicating a major crisis in the employment market at the very least. So we've got all the data in now for all intents and purposes, and I think we can probably expect that 0.25-point rate drop next week when the Federal Reserve meets.
Definitely. I think that's unless something comes up between now and then that we're not expecting. I'm thinking that a quarter point would be in line with what Europe's doing, and so I think that would probably be the first move they make.
Now, we should mention that our friends over at the European Central Bank cut their reference rate by 0.25 point this morning, which is helping Europe, but it gives a little. I don't know. Do you think the Fed watches Europe at all, or do they think that everybody's watching us? I mean, how geocentric are these birds?
That I don't know. I've never really seen any research or anything that lines up. But if you look at them, they do seem to kind of follow each other over time.
And that's true, but it seems normally the other guys are following us. This time we have an opportunity to follow Europe, and since we're as closely aligned in market conditions between the two economies, I got to believe it's just one more weight on the side of the scales that says 0.25 point next week, and I'd call it basically closer to slam dunk right now. That's what we're looking at, instead of even that 13% chance of a bigger cut.
Yeah, exactly. So I mean, I think 0.25 point makes sense because you still got a couple meetings to go this year, and so you've got time to make more adjustments.
Absolutely. The expectations of some really heavy cuts in the interest rate probably won't start until we get closer to the November meeting. The report season, not very much out. Earnings season pretty much is over for the time being, but we got a couple of reports out. One of them owns a chain of restaurants that we've heard of, right?
No, the one I'm looking at, Dave, I'm not sure which one you're looking. I'm looking at Oxford Industries, which owns Tommy Bahama, not the restaurant chain, but the clothing store.
Okay, overpriced clothing. How are they selling?
Well,
instead of overpriced food, overpriced clothing. All right.
Yeah. So, but they missed. They're struggling a little bit. They were expected to earn about $3 a share, and they didn't. They earned about $2.77 a share. A revenue also missed by almost $20 million. So it's been a little bit of a rout for them. They're down almost getting close to 11% this morning.
That's not going to help the index they show up on. I know you and I were talking before we went on the air. Both of us saw the thing that Kroger, the big grocery store chain, had beaten the street, but we didn't have any numbers. Did anything pop up on your tip sheet while we've been yammering?
Now, I don't have any of the numbers, and they're really not getting much of a benefit from that beat. They're up about 0.6%. I will tell you though that again, I don't have any specifics if they even reported earnings, but Moderna is in the news.
Hmm.
Um, they announced, and I'm assuming they probably did this during their earnings announcement, but this was more important than anything else. That they plan on slashing expenses by $1.1 billion over the next 2.5 years by 2027.
And they
Which
say they're slashing their research spending, which really kind of surprises me.
yeah, but they also said they plan on anticipate launching 10 new products between now and then. Um, but that's got them trading down almost 13% this morning.
Whoa, yeah, well, that indicates again. We always say that the market price of a stock is a leading indicator. If you're pulling your research back a little bit and just counting on what you've already got coming out of the pipeline, that indicates a year or two from now we may very well be sounding negative comments about Moderna, right?
Yeah, we might have a research, a dry inventory coming through.
Yeah, you don't have new junk coming down the pipe, you're in trouble. Resetting the table update yesterday at the end of a little bit of a scare at the beginning of the day, 45 minutes before we opened this morning. I know my fear and greed index is now ticked solidly into the fear element, which we probably are going to stay there until after the Fed meeting next week. How are we doing 45 minutes early?
You know, I will say that the green is starting to subside, getting closer to zero, but they're still green, right? The Dow is up a little less than 0.1%, as well as the S&P 500. Nasdaq 100 is almost flat right now. So, yeah, it's going to be an interesting open based on what we're seeing right here. On the other side, we've got silver making a huge jump this morning, up 1.8% to $29.45 an ounce. Gold's up a little over 0.75%, and crude oil up 1.1 this morning right now, Dave, but still not in bad territory at $68.08 a barrel.
We'll take that happily. Stay under 69 and I'll be relatively happy. Looking across the various ponds, the mainland Chinese markets are still they're going through a case of the flu. They were off this morning. Everybody else in the Asian rim up considerably this morning. The Nikkei in Japan was up 3.5% at the 6 a.m. close this morning. Over in the European community, generally a solid amount of green ink this morning, about halfway through their trading day. European indexes are up between 0.7 and 0.8%. That's not bad growth halfway through the day. Getting my retirement together in a plan I can count on. I probably don't want to invest in avocado futures. I probably need something with a little less risk. How do I get a hold of you to put a plan together so I'll be able to retire someday, Phillip?
Dave, that's why I created the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
Hey, and you and me back together again tomorrow morning about the same time. I'll see you then, sir.
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. It's nice.
Thanks again. I want to thank you for joining us today. Hope your week's going well. Hope you'll join me again tomorrow as we close out the week and talk about what's happening in the marketplace. Give us a call if we can be of any help. 863-382-0037. Hey, until tomorrow, have a great day.